This is the fourth video that we are going to discuss with regard to the 2020 A-level paper. And from this video, we're going to talk about the question from question number 31 to 40. Question from question number 31 to 40, right? You identify the trend of the paper. Puta, always your examiner, when they ask the first question, right, in your MCQ paper, they are starting from the first few topics. And gradually, when the number of questions are increasing, when you get the number of questions, they are following the sequential order of the syllabus. It's continue up to question number 30. මුල් ප්‍රශ්න ටික අහන්නේ paper එකේ මුල් syllabus එකේ මුල් පාඩම් වලින්. Gradually they are testing the other part of the syllabus. And when it's come to the question number 30, they are checking the entire syllabus. Hopefully, what most of the areas of the entire syllabus will be discussed. If you look at properly, question number 29, question number 30 will be tested from the management accounting, which is the last part of the syllabus. Then again, when they are starting the question number 31, when they are starting from the question number 31, again, that's the second part of the paper where you provide very direct answers. Examiner started again from the beginning of the syllabus, right? Question number 31, 32, 33 onwards, you will get what? Beginning of the syllabus, right? So then you can look at the question number 31. I think you may trend always try to understand this particular trend, right? Again, they go to the beginning of the syllabus and start testing the same thing again. The entire syllabus will be discussed, will be tested in your first paper. Entire syllabus will be tested in your first paper in two different ways, right? One giving the MCQs, the other one giving the short questions, right? Where you need to provide the direct answers, right? Okay, shall we look at this? Question number 31, right? Question number 31. Write short answers for for the question 31 to 50 using the dotted line, right? Okay, we look at the question number 31. State whether the following statements as to the general purpose financial statement true or false. Following statements are true or false. That's what they're asking, right? True or false statement you need to provide. But they're asking about the general purpose financial statement. You know that the general purpose financial statements are the output of the financial accounting. General purpose financial statements are the output of the financial accounting, right? The first one. The statements are prepared in compliance with the accounting standards. There's all accounting, all the financial statement you need to prepare in compliance with the accounting standards. Yes or no? Yes. There's no any legal requirement for it, but general purpose financial statements, as you publish it to the external stakeholders, you better prepare the financial statement using the accounting standard. Answer is true, right? So then when we talk about the difference between the financial accounting and the management accounting, even you identify when it's come to the financial accounting, you use the accounting standards. When it's come to the management accounting, you don't follow the accounting standards. Accounting standards are applicable for the financial accounting. So these general purpose financial statements are output of the financial accounting, right? Out of the financial accounting, yes, it's true. Second one, part B. These statements are prepared primarily for the use of the resource provider of the business. General purpose financial statements are mainly provided for the external stakeholders. Out of the external stakeholders, there are many stakeholders, many external stakeholders. When you look at B, they are talking about what? These statements, read the question again. These statements are prepared primarily for the use of resource providers of the business. Who are the resource providers for the business? Shareholders and the lenders and the creditors, right? Yeah, they mainly provide the information. They mainly provide the information for the general purpose financial statement, mainly provide the information for the external stakeholders, sorry, the fund providers. That means they talk mainly about what? The shareholders of the company. Yes, general purpose financial statement you provide for the fund providers of the company over the investors of the company. That particular statement is also true, right? Make up managers that are internal stakeholders for the internal stakeholders, they get the separate set of financial statement, which is called what? Special purpose financial statement, right? They're entitled to get the special purpose financial statement where you have more detailed information. Therefore, general purpose financial statement you are providing for the external fund providers. The answer is true, right? The part C, the statement provide the information relating to the past period of the business. Obviously, yes. General purpose financial statement never ever provide the future information. It provide only the past information. This particular statement is also true. Then the statement provides information of the business measured only in the historical cost basis. Is it true? Revaluations of the property, plant and equipment, recording the inventories and lower of cost and net realizable value, right? Those you could remember. Those things you could remember with regard to this particular thing. When the inventories are recorded at the lower of cost and net realizable value, especially when you record the inventories at the low value, what will happen? The net realizable value, what will happen? You are not following the historical cost concepts. When the assets are revalued, you are not following the historical cost concepts, right? Yes. Most of the financial statement figures are recorded at the historical cost. It's true. It's true. No doubt. That has no doubt. Not all the transactions. Therefore, that particular statement is false. Right. If I go through the question again, the statement are prepared in compliance accounting standards. Yes, in financial accounting, when you prepare the output, you have to follow the accounting standards. These statements are prepared primarily for the use of the resource providers of the business. Here, the fund providers, shareholders of the company. Yes, for the use of them only you provide that. These statements provide the information related to the past period of the business. Yes. General purpose financial statement always talks about the past years. What are the components of the general purpose financial statement? Comprehensive income statement, statement of financial position, cash flow statement, statement of changes in equity, and notes to the account. Those are the 5 components of the financial statements. And the last statement is wrong, Puta. There are many situations you deviate from the historical cost concepts, right? Therefore, you can't say that when you are preparing the financial statement, business always follow the historical cost concepts. No, it's not correct, right? Okay, so then the correct answer we have given for the question number 31, right? Now with that idea, we will move to the question number 32. The following information has been extracted from the accounting records of a business on 31st March 2020 and 31st March 2019, 2 consecutive years. Information they have given: assets 1.2 million at the beginning of the previous year. That means at the end of the previous, that means beginning of this year, it's 1.2 million. At the end of this year, it's 1.7 million. Liabilities at the beginning of the current year, it's 700. Liabilities at the end of the current year, it's 900,000, right? During the year ending 31st March 2020, owner paid the loan installments of the business 120,000 out of his personal funds. The obtained 90,000 from the business every year to pay the school fees of the children. He does not draw any other money from the business, right? So they want you to calculate the profit of the business. They want you to calculate the profit of the business. So how to calculate the profit? Now you know that in this type of a question, you're supposed to use the profit equation to get in the answer, right? Profit equation. Okay. So then how to find the profit equation? What is the profit equation? We'll move into the answer, right? The answer, you can see the profit. What's the profit equation that we're supposed to use in getting the answer for this? Your closing equity minus opening equity plus drawings minus additional capital. That's a formula that you're supposed to use. Closing equity minus opening equity plus drawings minus additional capital. Closing equity you can very easily calculate it in this question. How much it is? Closing equity, how do you calculate? Open the closing assets minus opening assets. Closing assets minus closing liabilities. Closing assets it's 1,700,000. Closing liability is 900,000. So then the closing equity, it's 800,000. Here at the beginning of the year, opening assets 1.2 million and the opening liability 700,000. Then the difference between these two, it's 500,000, right? And according to the separate entity concept, if owner make the business payment, that you need to consider as what? Additional capital, right? Whatever the amount paid by the owner, you need to consider as the additional capital. Therefore, owner has paid the business loan installments of 120. That 120 you need to consider as the additional capital. And there was the drawings of 90,000, right? Everything is fine with regard to this. And how you supposed to do, Puta? Closing equity 800,000, you can see, right? And opening equity is 500,000. That also we can see, you can see we have calculated opening equity balance that has to be deducted. And the drawings of 90 that you need to add an additional capital 120 you need to deduct. Then the profit of the business rupees 270. Profit of the business rupees 270. Was it clear for you? Right. Okay. Using the profit equation, so I supposed to calculate the profit of the business. Right. Right. In addition to the previous profit equation we could use, Puta, there's another profit equation that we can use, right? That is changes in total assets minus changes in total liabilities minus net capital increase. In a business, there are three ways of generating the assets. If you take a business, there are three ways of generating the assets into the business: owner, other parties, and the business itself, right? Those are the three methods of generating the assets into the business. Either owner should introduce, or you should go for the liabilities, or what? The business itself can generate. If owner introduce, you call it as equity. If owner introduce, you call it as equity. If you obtain it from the other party, you call it as liability. If business itself generate, you call that as profit. If business itself generate, you call that as profit. Out of the total assets, changes in the total assets, if you subtract the liability, how much the amount that has been increased due to the liability and how much the amount that has been increased due to the owner's participation, the remainder is the profit. So then this is another equation that you could use in calculating the profit. If you take the changes in the total assets and the liabilities, Puta, you can see total assets during the asset was increased by 500,000, right? 1.2 million was at the beginning, at the end 1.7 million. So then the total asset was increased by 500,000. Out of that 500,000, 200,000 was increased due to the liability. So what have we done? That 200,000 you have deducted. You have to deduct, right? Changes in total liabilities is 200,000. So that you will have to deduct. Net capital introduced is 30. You can see owner has introduced additional capital of 120. Here there was a drawings of 90. And how much the net capital introduced? 30. And that also you need to deduct. 500 minus 200 minus 30 net capital introduced. Still you get the same answer of how much? 270. So there are many formula that you could use in calculating the profit. So the most popular equation, closing equity minus opening equity plus drawings minus additional capital. And there was another formula that we're supposed to use. What that is? Changes in total assets minus changes in total liabilities minus net capital introduced. Net capital introduced. Is that clear? Right. Understood? Okay. Puta. Then what's the correct answer? We have discussed two possible methods of getting the answer. So then it's 270. Then thereafter, they want you to calculate the retained earnings, right? Can someone tell me what is the formula that you use in calculating the retained earnings? What's the formula? Retained earnings. The profit reinvested by the business, by the owner. Business එකේ profit එක කියලා කියන්නේ owner ට ගෙදර අරගෙන පුළුවන් ගන්න. Profit is the amount that owner can take away from the business. Out of the amount that owner can take away from the business, when you subtract the amount that has been taken out by the owner, the remainder is the retained earnings. ඉතුරු ටික තමයි business එකේ retained earnings එන්නේ. තේරුණාද? ඒ කියන්නේ business එකේ තියපු retained earnings එක. Right. Now from the profit, when you subtract the drawings, then you get the retained earnings. Put our total profit of the business 270. There's a drawings of 90,000. Then how much will be the retained earnings? This minus this, it's 180,000. It's 180,000. Retained earnings of the business 180. Tell me how are you supposed to calculate the retained earnings with the profit minus drawings, the amount reinvested by the business. Even the business again one ගෙදර අරන් ගියපු නැති ප්‍රමාණය. අරන් ගියේ නැහැ කියන්නේ තියලා තියෙනවා. Again, a profit you reinvested. So that's the best way of generating the assets to the business. Retain earnings. Earnings. From the earnings, if you can generate the assets, it's really good. Right. So that is all about the question number 32 of the paper. And we will move to the next question, which is question number 33. So the correct answer for the question number 32B part is 180,000. That is 180,000. Right. Question number 33. Indicate the prime entry books used to record each of the following transactions of a motor vehicle trading company, which is very important. SLFR is 15. Revenue recognition. The revenue. Their view talks about the revenue. And in the conceptual framework, we talks about the income. Is there a difference between these two, income and the revenue? Yes. Revenue is the income that you generate from your main business activity. And income has everything, right? Revenue and the gains, everything includes in that word of income. Now here, this particular business is a motor vehicle trading business. Therefore, their main business activity is selling the motor vehicle. Their main business activity is selling the motor vehicle. Therefore, if this particular business sells one of their motor vehicle, that you need to consider as a part of the revenue, keep it in your mind, right? So then if you made a credit sales of motor vehicle, that you need to record in the, they are talking about the prime entry books in the sales journal, because their normal business is what? Sale of motor vehicle. But another business, like for an example, if a garment factory disposes a motor vehicle, it has to be recorded in the general journal if it is a credit transaction. But here, this is a motor vehicle trading business. Keep it in your mind, right? Okay. In that case, transactions and the prime entry books they have given, they want you to identify the transactions, right? You have to be very careful. This is a motor vehicle trading company. That trading activities, buying and selling the motor vehicle, right? The purchase of motor vehicle on credit basis. If you purchase a motor vehicle on credit basis, why you buy a motor vehicle to resell? If you buy something to resell, so that you need to identify it as what? The credit transaction. So then it need to be recorded in the purchases journal. Next one, purchase of a truck on credit to be used in the delivery of motor vehicle. You purchase a truck, but not to resell, to what? Deliver the motor vehicles. So then that is a non-current asset for you, right? You purchase it on what basis? Credit basis. Then it will be recorded in the general journal. Identify the transaction, identify the main income source of this particular business. Then it need to be recorded in the general journal. Sale of the motor vehicle on credit, sales journal. Then when a prashnek ahuwa when a business this is supposed to be recorded in the what? Sale of motor vehicle on credit basis supposed to be recorded in the general journal, but this has to be recorded in the what? Sales journal, because their main business activity is buying and selling the motor vehicle. Next one, payment of the sales commissions. The sales commission payment, any payments, right? Irrespective of the nature of the payment, maybe the expenses, maybe for the creditors, maybe the cash drawings made by the owner, repayment of the bank loan, whatever, any payment, you are supposed to identify it through a payment journal, right? It need to be identified as a cash payment, and it need to be recorded in the payment journal. In the marking scheme, they have given the answer for the cash book as well. But don't use the word of cash book. Now, cash book is no more available. We use the receipts and the payment journal when recording the cash transactions, but examiner has given the marks for the cash book as well. That is I have taken here. But in your examination, don't use the word of cash book. Use the receipt journal and the payment journal. Right. Okay. Identification of the prime entry books. Question number 34. Calculate the impact of the following transactions on the creditors control account balance and indicate whether the balance will increase or decrease together with the values, right? Transaction, and they're asking for the impact. Purchase goods with a list price of 100,000. Put the list price is before deducting the trade discounts or after deducting the trade discounts. List price of something, what? Before deducting the trade discount. So before deducting the trade discount, list price is 100,000. And now when you allow the discount of 10%, invoice price will be how much? 90,000. And of a product, 90,000 is a list price. Sorry, invoice price. So when you purchase stocks on credit basis, what will happen? Your creditors balance increase by rupees 90,000. Give me a good name for this 90,000. That is the invoice price. And the price before deducting the trade discount is a list price. Price after deducting the trade discount, it is called invoice price. Invoice, and the difference between those two you identified as a trade discounts, right? Part B, payment of cash to settle a balance of 50,000 due to the creditor subject to cash discount. Cash paid to creditor. Cash paid to creditor, right? When you pay creditors 50,000, right? Cash paid to settle a creditor balance of 50,000. The total amount of settlement is 50,000. You don't know how much of cash you paid. You don't know how much of cash the discount you received. But anyhow, due to these transactions, your creditors balance reduces by 50,000, right? 50,000. Very simple question, right? Then that is a question number 34. Then we'll move to the question number 35. State two situations in which the historical cost concept is not followed when preparing the financial statements. මේක මහලා තිබ්බනේ paper එකේ කලින් question එකකටත් අපිට මේ idea එක ගන්න තිබ්බා. ඒක අහලා තිබ්බ එක පාරක්. මොකක්ද මේ paper එකේ මහලා තිබ්බා general purpose financial statement always prepared on what basis? Historical cost basis, right? We said no, right? When you are revaluing the assets, when the assets are recording, when the stocks are recording at lower of cost and net realizable value, you don't follow the historical cost concepts. That means always you can't say when preparing the general purpose financial statement, always you follow the historical cost concepts, right? Yes. State in which historical cost concepts is not followed when preparing the financial statement. Oh, with our first situation when property, plant and equipments are revalued, right? Not in the initial recognition, but in the subsequent recognitions, property, plant and equipment can be recorded at the revalued amount, right? So when you are revaluing, right, referring to the LK 16, when you are recording the assets at the revalued amount, what will happen? You are violating the historical cost concepts. Next one, when inventories are recorded at lower of cost and net realizable value, right? According to the LKS 2, inventories should be recorded at lower of cost and net realizable value. In such situation, you are not following the historical cost concepts. And one more thing we can give here, when the lease assets are initially recorded in the books of accounts, when you are recording the lease assets, there are several components that has to be recorded, right? In the initial recognitions of the assets, what are the components that has to be included in the separate, when you are recognizing the lease assets, right of use assets, cost initial payment made or no before the commencement of lease. Then present value of the future payments. Next, any direct expenses incurred, right? Like installation charges and all, right? The next one is estimated cost of dismantling and the removal cost, right? Those are the 4 items. When you are recording these 4 items, do you think that you follow the historical cost concepts? No, present value you recorded. Present value of the future payments you record, right? Estimated cost of dismantling and the removal you record. Is it the historical cost concepts? No, you are not following the historical cost concepts, right? Then too many question important paper paper when the assets are recording, when the lease assets are recorded in the books of accounts following the leasing standards, what accounting concepts will be violated? So hopefully it's a historical cost concepts, right? Historical cost concepts, right? And abhi cost ekata neme yeta record karana. You can't say it's a cost. It has many components, right? Okay, that is a question number 35. Cost ki define kala thina conceptual framework ke cash and cash equivalent paid or fair value of the other considerations given up, right? Athora metana cash and cash equivalent pay neme api future eva pawa metin diganna. right? And you are violating the historical cost concept, right? Okay, question number 36. Write the journal entries to adjust the following two transactions in preparing the financial statements of a business for the year ending 31st March 2020. Narration is not required. Examiner keyword narration, then you don't want to have it. But otherwise, definitely you should have the narration. Right. What is the first one? The goods were sold on 31st March 2020 for an order 180. This order was received in February 2020 with advance of 60. The balance amount is yet to received. You sold 180. The value of the sale 180, but this order was received in the month of February. So then by the time you receive the order, receiving the money advance of 60,000, at that time it was a liability. What would have been the double entry when you receive the 60,000? Cash account debit, advance received account credit. This advance received is a liability, right? But now for this 180,000 you have sold. එතකොට මේ 60,000 liability එක දැන් release වෙනවානේ. අඩු වෙනවා. මොකද අපිට liability එකක් තිබ්බ to supply the goods. Now you did that. When you supply the goods, what will happen? That liability will be reduced. එහෙනම් how you supposed to record? If you consider the double entries, what? That advance received account need to be debited 60,000, right? Trade receivables account debit 120. And the total sales income credit 180,000. Understood what I said? මොකද දැන් customer අපිට ගෙවන්න ඕන. අපි 180 sale එකක් කරාට මෙයාගෙන් 60,000 අපි recover කරගෙන තියෙනවා. 60,000 we have recovered from him already. We have received from him already. That means that amount he doesn't pay. That once he has already paid. Therefore, he need to pay. Even though we sold 180 to him, he need to give you only 120,000. The receivable amount you recognize only 120,000. So you can see income increases assets or decreases liability or both. So this is a good example to identify a transaction, the income, which reduces what? Income. Sorry, which reduces liability and increases of assets, right? Okay, look at the next transaction. The agreement was entered by paying 90,000 to conduct a sales promotion campaign for 3 months starting from 1st March 2020. This has been it has been dually operated since 1st March 2020. Putha, your financial year ends on 31st March 2020. Therefore, out of this agreement, promotional campaign, right, out of this agreement, during the current year, only 1 month will be covered. Only one month. That is the March 2020, right? Therefore, even though you paid 90,000, out of this 90,000, only 30,000 will be an expense. Balance amount you recognize as what? Prepaid amount. Balance amount you can recognize as prepaid amount. Got it? How are you supposed to recognize it, Putha? Your promotional expenses need to be debited 30, only 30,000, 1/3. Total amount is 90. Out of 90, 1/3 is 30,000. That 30 only you recognize. මාස 3කට payment එක කරා හැබැයි එක මාසයේ මේ financial year එකේ කාව වෙන්නේ මාර්ච් විතරයි. එහෙනම් that amount only you recognize as the expenditure, right? Accrual concept. Whether you paid or not, the amount relevant for the period you need to recognize as an expenditure. And the prepaid promotion, right? You paid balance 2 months, you paid for the next year, right? So then that you can consider 30,000. Prepaid promotion 60, sales promotion expense 30, and the cash credit 90,000, right? Api cash selling 90,000, right? Then api make a then recognize karanna wenne menna me vidita. Api assume karot the total 90,000 if you recorded under expenses. Then example like vidita transactions api ledger එක record කරද්දී පුතා payment journal එකේ මේක ඉස්සෙල්ලා record වෙන්නේ. Payment journal එකේ 90,000 record කරනවා. You record 90,000. Subsequently, from the payment journal, it goes to the promotional expenses account as 90,000. Promotional expenses account එකේ මේක 90,000 විදිහට record වෙනවා. එතකොට promotional expense account එකේ දැනට 90,000 තියෙනවා. දැන් අපි මොකද කරන්නේ? From the promotional expenses, we remove 30,000 and recognize it as an assets, right? We recognize it as an assets. If you have recorded the total amount as what? Expenditure. Okay, අනිත් පැත්ත වෙන්නත් පුළුවන්. ඒ කියන්නේ the total amount if you recognize as what? Prepaid amount. Then when you record it in the payment journal, the total amount if you record it as a prepaid expenses, out of that amount of payment, amount relevant for the period, you can recognize as what? Expenditure. දැන් මෙතන වෙලා තියෙන්නේ ඒක. ඒ කියන්නේ අපි 90,000 ම prepaid expenses වලට දැම්ම කියලා assume කරමු. මම මේ කියන්නේ පළවෙනි option එකේ 90,000 ම prepaid expenses වලට දැම්ම කියලා අපි හිතුවොත් in that 90,000 there's a amount relevant for the current year as well. එහෙනම් prepaid expenses account must be credited, prepaid expenses account must be credited, and the promotional expenses account must be debited. That is one way of doing this. Or else you can see you directly record. By the time you record it properly. අර වැරදි record කරලා හරි ගස්සන වෙන්නත් පුළුවන්. එහෙම නැත්නම් කෙලින්ම හරි විදිහටම record කරන්න පුළුවන්. That is the better one. But total amount of cash you paid 90. හැබැයි out of 90 පුතා prepaid expenses 60,000 and the sales promotional expenses 30,000. So in the examination, in the marking scheme, they have given the marks for both of these two answers. If you read the question again, you can see you made a payment of 90,000 for 3 months. But out of that 3 months, only 1 month cover the current financial year. So then only 30,000 you recognize as an expenditure. Question number 37. State the appropriate classification for the following account maintained by a business in the general ledger. Bad debts, you call that as impairment losses on trade receivable, which is an expense account. Drawings, you classified as what? Equity account. What are the 5 elements in the financial statements? Assets, liability, equity, income, expenses. Assets, liability, equity, income, and the expenses. Then any ledger account should be able to classify it into these 5 elements. So then bad debts you recognize as an expense, which is the nominal ledger accounts. Drawings you classified under equity. Provision for gratuity. Any provisions you make against a liability, you need to classify it as a liability account. Any provision makes against the liability, you need to classify it as a liability account. You should know the difference between the provisions and the liabilities also before you go to the exam, right? Then part D, accumulated depreciations of the office equipment assets. But are very important. Now we do not use the word called provision for depreciation. What is the word we need to use? Accumulated depreciations, right? Accumulated depreciation reduces the assets, but it need to be considered as an assets account. You know, any account related to an assets. Now, for an example, accumulated depreciations on the office equipment. That is an asset account. That is an asset account. Accumulated depreciation, expected losses on the trade receivable, which is an assets account. It reduces the assets that you don't recognize as a liability. It's an assets account. It's not an asset. It may not be an asset, but you in the classification that you need to classify as an assets account. Now you can argue with me. Accumulated depreciation, how do you consider that as an assets? No, I am not saying it is an assets. It is an assets account. There are 5 elements. Any ledger account should be classified into these 5. Therefore, accumulated depreciation, you can't put into any of the other 4. The best thing is you put it under what? Assets. So then question number 37, accumulated depreciation, you need to consider as an assets. Question number 38. Roshan and Hashan carried out a partnership, namely associates, without a written agreement, right? They didn't have the written agreement. Roshan and Hashan have invested 5 million and 3 million as a capital respectively. Further, Roshan has provided a loan of 2 million to the business, right? They had no agreement. If there's no agreement, you know that what section of the partnership ordinance will be applicable. Every sections of the partnership ordinance will be applicable. But with regard to the profit sharing and all, section 24 will be applicable, right? You are required to identify the following statements are true or false with regard to the partnership. First one, Roshan and Hashan are entitled 5% interest on capital. So if there's no agreement, look at the section 24 of the partnership ordinance. If it is a matter of sharing the profit, section 24 of the partnership ordinance says what? Partners are not entitled for any interest on the capital provided. Therefore, that particular answer is false. Partners are not entitled for any capital provided, right? එයාගේ capital එකට එයාට interest ගෙවන්නේ නැහැ partnership ordinance එකේ. පැහැදිලිද? Right. What is next? An interest of 5% per annum should be paid on the loan provided. Yes. What is the section? What is the section? 42 or 24? Still 24. This is an existing partner. Existing partner, if an existing partner provided any amount other than the capital, that you need to consider as a loan. That loan is entitled for 5% interest. This is true. This is true. Section 24, 42 42 if a retired partner, if existing partner retired, and if his balance transferred to the loan account, how much you are supposed to pay? That is something else. But this is something else, right? Existing partner has given a loan, right? C. Roshan and Hashan are not entitled for salary as a partner. Yes or no? Yes. For the management function, what is the salary given? But me exam duplicate pela thiyena me questions. Theruna the first part එකේ අහලා තියෙනවා වගේ මම මේකෙත් අහනවා. පැහැදිලිද? Right. True or false? Roshan and Hashan are not entitled. Yes. Right. It's true. They are not entitled for any salaries. If you apply the section 24 of the partnership ordinance. D. Roshan and Hashan should share the profit and losses according to the capital ratio. First part එකේ අහුවා මේක. පුළුවන්ද? Yeah. Still, you should share what? Profit and loss according to the according to section 24, profit and losses should be shared equally. Profit and losses you can share based on the capital ratio if they don't have an agreement. Metan agreement එකක් තියෙනවා. Here there is an agreement. Sorry. Metan there agreement එකක් නැහැ. Agreement එකක් නැති නිසා profit and losses equally share කරන්න. බැරි වෙලා හරි agreement එකක් තිබ්බනම් ඒ agreement එකේ ඒගොල්ලන්ට ඕන විදිහට ඒක share කරගන්න පුළුවන්. Capital ratio එකට නෙමෙයි ඒගොල්ලන්ගේ ඕන විදිහකට ඒක share කරගන්න පුළුවන්. ඒක අපිට ප්‍රශ්නයක් නෑ. That is the discretions of the partner. That is the discretions of the partner. හැබැයි if there's no agreement, so then you need to look at the section 24 of the partnership ordinance. According to the section 24 of the partnership ordinance, irrespective of the capital you provided, profit should be shared what? Equally. Therefore, this particular statement is false. Roshan and Hashan should share the profit and losses in their capital ratio. No. If you do not have the agreement, profit and losses should be shared equally. Right. Question number 39. State the reason for which the partners are entitled for each type of following profit appropriations of a partnerships. Right. Appropriation, type of appropriation and the reason. Interest on capital. Why you pay the interest on capital? Why you pay the interest on capital? For the capital you provide. Very simple. As a partner, you are entitled for 3 things in your syllabus. What are they? Interest on capital. That is for the capital provided. Second thing, profit share. That is for the risk. Salary. That is for participating managerial functions. Interest on capital you pay for the capital provided, right? Opportunity, you can say many things. For the very simple answer, for the provision of capital. If you provide the capital, you are entitled for the interest. The opportunity cost of capital. And when capital investment ratio and the profit share ratios are different to each other. Then a capital ratio එකට මනම් profit එක බෙදාගෙන කියන්නේ partnership agreement එකක් තියෙන්න ඕනේ. එතකොට එහෙනම් interest on capital ගෙවන්න ඕනේ නැහැ. ඒතර interest on capital ගෙවන්නේ එහෙනම් profit sharing ratio එකයි capital investment ratio එකයි අතර වෙනසක් තියෙනවා නම් විතරයි. ඉතින් many justifications you can say. හැබැයි බොහොම සරලව අපි තේරුම් ගන්න ඕනේ why do you pay the capital interest on capital for the capital they provided. Next one, B. Salaries of partners. Why you pay salaries for the partners? Not for any reason, but for participating what? Managerial function. They are management එක කරනවා. ඒකට අපි salaries partners ලා. නේ ඔක්කොම equal proportion එකට participate වෙනවා නම් salaries ගෙවන්න අවශ්‍යත් නැහැ. හැබැයි එක එක proportion නම් so you have to pay the salaries. C. Profit share. Profit share you give for bearing the risk. නේ risk එක bear කරනවට තමයි අපි profit එක ගෙවන්නේ. ඒක fluctuate වෙනවා. නේ සමහර අවුරුදු වල අර profit නැති වෙන්න පුළුවන්. සමහර අවුරුදු වල වාට ලොකු profit එකක් තියෙන්න පුළුවන්. ඉතින් ඒක risk, high return, low risk, low return. That's a simple investment theory, right? Okay, that is all about the question number 39 and the question number 40. State whether the following statements are true or false as per the LKA is 8. As per the LKA is 8. Okay, first one. The changes in accounting estimation should be adjusted. Changes in accounting estimation should be adjusted in the financial statement prospectively. Answer is true, right? What is the prospective adjustment? Making the adjustment for the present year, and if it is affected for the future years, do the adjustment for the future years as well. This particular statement is true. Changes in accounting estimation should be adjusted prospectively. Next one, changes in the accounting policies. Policy changes are always applied retrospectively. Accounting policy changes always applied retrospectively. Puta, you need to apply the accounting policy changes retrospectively if it is affected to the past years only, right? If it is affected to the past years, if it is not affected to the past years, you don't want to adjust them retrospectively, right? Policy change එක පහුගිය අවුරුද්දට adjust වෙනවා නම් affected වෙනවා නම් විතරයි you need to adjust it what? Retrospectively. Therefore, this particular statement you can't say as a correct answer. It's false. Next, the changes in the method of depreciation of an asset is a policy change. No, which is an estimation change. Changes in accounting policy is an estimation change. It's not a policy change. Last one, changes in the useful lifetime of an asset is changes in the accounting estimation. Answer is true. Answer is true. Change accounting is the useful lifetime of an asset is an accounting estimation. Yes, when you change it, right? When you change it, you can consider changes in accounting estimation, right? So that is all about the question number 40. And from this video, we wanted to talk about all the question that has been tested in the 2020 A-level paper from question number 31 to question number 40. So then with this question, we have done the all the 10 questions that we are supposed to discuss from this video. And we'll meet up with another video. Then there we talks about the question from question number 41 to question number 50. I hope that you watch the other video that we have done, all other past paper question. In our first video, we did question number 1 to 10. And in the second video, we did question number 11 to 20. And question from the third video, we did question number 21 to 30. And from this video, we did question number 31 to 40 and 41 to 50. Last 10 questions also will be discussed with another question, right? Okay. Thank you, everyone.